Good evening, everyone. I hope you're doing great and welcome to this Contenders live stream number 147, Reversal Patterns and Reactions Part 2. If you watch my stream from 2 weeks ago, in the first part of the reversal patterns and reaction, I covered in depth what you need, how to use the reversal pattern and what is the best reaction, the best case scenario and the red flags and everything. But I think I need to make another stream because I need to go more in depth about certain aspects of the reversal patterns, and that way you can use the reversal patterns in the best way possible. So without further ado, let's start. First of all, the trading disclaimer. Everything that all the information that we are sharing tonight and generally at Chat Champions, it's all about educational content, and by any means this can be used as financial advice. With that being said, let's start with this stream. So the reversal patterns. In the first part of the reversal patterns and reaction, I tried my best to explain the reversal pattern and some of the reaction that I'm using when I'm trading. Everything I shared is based on my personal experience and on my trading journaling. I think it would be unwise to present any information without the proper testing because I want to make sure the trading system works over an extended period of time. This is really important because you want to make sure that a trading system needs to be tested and over an extended period of time, like I said, just to make sure it works, because there are sometimes that one thing works and after that the market is changing, the conditions are not the same, and maybe that pattern, that trading system is not working. So for that we need a testing period over an extended period of time, and this is basically what I was doing. Moving forward, I like to test the system in a bull market and in a bear market to get the best results possible. This is really important because the conditions are not the same in a bull market and in the bear market. Before I present any information or trading system, I like to spend between 3 and 6 months, sometimes more. In this case, it's a bit more than 6 months, with testing and journaling results. And it is really important to test and journal your result, because that is the only way you can actually see if the system works or it doesn't work. What conditions are the best one to use when you are using a trading system? The testing period is giving me the confidence the reversal pattern works with a high winning rate. And according to my journaling, actually the reversal patterns are the winning rate is, let's say, between 85 and 87% if they are applied correctly. So I would say they give a really nice winning rate. Moving forward, in the second part, I would like to get more in depth about when the reversal pattern are giving the best results and when are the red flags, and how to react when you see a red flag and you think that the reversal pattern will not work. This is also really important because, like everything else in trading, the reversal pattern will not work every time, and there will be a moment when using the reversal patterns, it will end up in a losing trade. This is really important. Also, from the psychological point of view, because losing trades are part of the business, and as a trader you need to understand and accept this fact. This is really important, I would say, because, like I said, nothing in trading works 100%. There would be a moment, even with a let's say the reversal pattern, they are having a high winning rate, but there will be a moment when that the reversal pattern will not work, and as a trader you need to be prepared and you need to accept that that thing. Nothing works 100% of the times, and that is why we use the correct risk management. I want to make sure everything is actually okay. You should be able to hear me. Yeah, I think everything is good, so let's continue with this. Moving forward, the reversal pattern are based on the swing failure pattern, and it is a continuation of the swing failure pattern stream. And what it adds to the swing failure pattern is a retest. And you can use that retest to monitor the reaction and enter the trade if the reaction is okay. The retest will not happen all the time, but there will be a retest in more than 80% of the trades based on my experience and journaling. For the retest, you need to check the price action on low time frame, 1, 3, 5 minutes. Usually 5 minutes is all you need. Right now the price action is a bit slow, so 5 minutes is all you need, depending on how fast the price action develops. Like I said, right now the price action is a bit slow, so 5 minutes is all you need. And there are a few key elements for this reversal pattern. The reversal pattern are composed by 3 key elements: the context, the confluence, the context, and the reaction. Important note, I would say the reversal pattern will not give you a good trade. For a good trade, you need good confluences, good context, and good reaction. The only thing that the reversal pattern will give you is a sniper entry and a stop loss for your setup. This is really important because you need to understand how to actually use the reversal pattern. So the reversal pattern will only give you, they can be used in that moment when you have everything set, you have a trading plan, you have your confluences, you build your context, and when actually the price is touching your confluence, your area where you want to trade, that is the moment you actually want to use the reversal patterns. Could be the first one or could be the second one, doesn't really matter, but that is all this trading, the reversal pattern will give you. Only a sniper entry, the best entry possible, depending on the retest, depending on the price action, and a stop loss. Take profit should be determined using technical analysis. Again, using confluences depending on each situation. This is really important to understand. Also, I would like to talk about each one of these elements and how to combine them in the reversal pattern for the best results possible. So remember, confluence, context, and reaction. And I would like to take some time to talk about each one of them. So let's start with the confluence. The confluence is maybe the most important part of the trading because it creates the point or area where you want to open a trade. For the best results, you want to have multiple high time frame confluences. That would give me the confidence for a good trade. This is really important, and then we will go in depth about how to use the reversal pattern. The high time frame confluences could be a combination between a horizontal level, daily, weekly, monthly, untapped if possible for the best reaction. So most of the time you like to see an untapped horizontal level, a high time frame CC, low to high or high to low, really depends on the situation, a high time frame CC, a high time frame fib fan, they give really good results, high time frame point of control, value area high, value area low, so high time frame, value area. Those are the main confluences that I actually use for my trading. Obviously, there are a lot of confluences that we could talk about. We could use Elliott wave, we could use harmonics, we can use trend line, you can use anything you want, but it has to be high time frame confluences. The high time frame confluences give the best results. Building good confluences comes with practice and experience, and it takes time. But if you work hard enough, I'm 100% sure you will get there. Definitely the experience is really, really important when you try to find these high time frame confluences and put them together to find that area, the price when you actually want to trade. This is really important. Moving forward, the main purpose of the reversal patterns are the high time frame reversal, and this is really important. They give the best results on the high time frame reversal, where you have good confluences also when you see good reaction. That would give the best results. But the reversal pattern can be used for scalping and for day trading with some small differences. Like I said, the reversal pattern give the best results when you see a full reversal, right? So most of the time I use them for a swing trade. When I have my confluences, I check the reaction, I see a good reaction, and then I actually want to take the trade. Then I can use the reversal pattern, and the best results are given on the high time frame. But like I said, they can be used for day trading and for scalping with some small differences. When you want to use the reversal pattern for scalping and day trading, you also need good multiple confluences. Doesn't have to be high time frame confluences, but the confluences should be good enough to give you the confidence for a trade. And I will show you some examples about how a confluence should be. Best case scenario for a day trade, you want to see a high time frame level, a horizontal level, untapped if possible, a high time frame value area level, point of control, value area high, value area low, a naked point of control, a high time frame CC, a high time frame fib fan, etc. Could be anything. So you need a high time frame confluence and a low time frame confluence. So remember, for a swing trade, you need to have multiple high time frame confluences. For a day trade, it is acceptable to have a high time frame confluence plus a low time frame confluence, and that could be VWAP, naked session point of control, previous day level, local CC, so on lower time frame, or something else, something to give you confidence for a possible trade. This kind of confluence would give me the confidence to set an alert for a possible trade. I can use an already tapped high time frame level plus an additional low time frame confluence like the one I mentioned above. So for a high time frame, for a swing trade, I would like to have most of the time, and best case scenario, I would like to have to use untapped levels, high time frame levels. But for a day trade, depending on situation and depending on the reaction, because we are talking about trading based on reaction, I would use already tapped high time frame level. Like I said, could be a daily, could be a weekly, monthly, could be a point of control, but I need a high time frame confluence plus additional low time frame confluences. Once again, could be VWAP, could be a naked session point of control, could be a previous day level, could be a daily open, could be a local CC, could be, I don't know, could be anything. But really important, best case scenario, I want an untapped high time frame level, but it is acceptable to have an already tapped high time frame level plus an additional confluence. For a scalp, I can use only one high time frame confluence like the one I mentioned above, or a multiple low time frame confluence like a naked session point of control, local CC, previous day level, etc. So this is for day trade. This is for scalping. So for a scalp, actually, if I have something like a daily level, an untapped daily level, and that level gives me confidence, for a scalp, I would use only one confluence. This is really important. That high time frame confluence needs to be an untapped level. That would give me the best confidence. Can be an already tapped level, yes, but that really depends on the context. But if I have a high time frame confluence, untapped one, for a scalp, that is good enough. Also, okay, I mentioned above, and multiple, or you can use multiple low time frame confluence. What that means, that could be VWAP on a local CC. That could be good enough for a trade. Again, everything here depends on the reaction. So we don't preset, we set an alert. Once the alert is triggered, check the reaction, see if you can actually use the reversal pattern if the reaction is okay, and then you can actually take the trade, right? But that would be only for a scalp, and I would be more aggressive with take profit one. So when I'm scalping, like I said, you can use only one high time frame level, or best case scenario, an untapped. Could be a tap level where you see good reaction. I mean, that level acts as an SNR flip level, and each time the price touches that level, you actually see a reaction, or multiple low time frame confluences. But a scalp is a scalp. And when you're trading for a scalp, I mean, a good take profit one could be anywhere between 0.5 and 1%. Again, depending on the reaction, depending on additional confluences. And most of the time, I like to be more aggressive with my take profit one. And when I close take profit one, I actually move stop loss at entry. In a good scenario, a scalp could turn into a day trade and possibly into a swing trade. But until proven otherwise, it should be treated as a scalp trade. Again, let's say you see a good enough confluence, right? And you see a good reaction and you take that trade. And you see a good, let's say you're looking for a long and you see a good bounce, right? You close take profit one. Could be 25, could be 50%, could be whatever. Let's say most of the time I close 50%. But if I see good reaction and the price is moving, let's say up, if I'm looking for a long, then I move stop loss at entry and starting with take profit 2. And if I want to use take profit 3, I would not be so aggressive, you know. And if I see, like I said, good reaction, then I would keep that scalp trade running for as long as possible. And that way, a scalp could turn into a day trade, and sometimes not all the time, but sometimes could actually turn into a swing trade. Okay. Moving forward. So that would be the confluence. I only wanted to touch this. I don't like to go really in depth because we already have a stream about this, but I feel that it's really important to understand how to build the confluence, because the confluence is really, really important. Is maybe the most important part of a trade, especially when you're using the reversal pattern. So understanding how to build the confluences, you know, could give you a big advantage when you're trading. Moving forward. So the first one was the confluence. Next one is the context. Once you have the confluence, then you can start building the context. I talked a bit about the context in the first part, but I want to go a bit more in depth this time. The context is very important because it creates the possibility for actual trade. Without a good context, the chances for a good trade are very small, and most of the time that trade will end up in a losing trade. And actually, I would yesterday I asked for some examples in the chat where maybe use the reversal pattern, and I'm interested in the cases where obviously the reversal pattern works, but they work most of the time. But I am more interested in the examples where the actual trading pattern doesn't work. And actually, I got two messages, and I will go over that because yesterday that was a very good example where the context was not there, you know. But I will talk about that later in the stream. For context, we can use all the information prior to the moment we actually take the trade. The most important elements to check when we are building the context are the price action and the market sentiment. The price action. For the price action, I explained what I want to see in the first part of the stream, so I'm not going to talk very much about it. Again, I covered everything in details, each scenario, the first one, the second one, for a long, for a short. So I'm not gonna go too much in that because it will take actually too long. Everything is explained in the first part of the stream. So if you want to check that, the stream is available on the website. But as a general rule, for a reversal, you want to see the volume decreasing when the price is moving towards the apex of the move. And after the reversal, you want to see the volume increasing following the new trend. So what that means, let's say, once again, you're looking for a long, right? So you want to see the price moving towards your confluence area. So the price moving to the downside with decreases in volume. And after the reversal, you want to see increases in volume, and if possible, increases in open interest, increases in positive delta, open interest, and so on. Like I said, I explained everything in depth in the first part of the stream. So I'm not gonna go too in depth about this, but I would say the volume is actually the most important part of the reaction. So usually the price follows the volume. The market sentiment. This is something new, right? And I want to talk about this. I hope you will understand what I'm trying to say, because this is something new, and this is something that I started to use, and you'll see why. The market sentiment is used to check what most of the traders are thinking at that point in time. That could give you the edge when you're trading, and if you know how to use that and when you are trading, if you know how to use that information in a correct manner. Most of the time you want to buy when there is extreme fear in the market, and to sell when there's extreme greed in the market. This is really, really important, I would say. Really important note. Do not confuse market sentiment with the news. The market sentiment could give you an idea about what the retail traders are thinking at that point in time, and that information could be used to build context. I want to finish with this, and then I'll go more in depth about what I actually want to say with this. I'm sure the bigger players are checking the market sentiment too, and you need to decide if you want to trade like the bigger players or you want to trade like as the retail traders. Trading based on news is just pure FOMO or fear, and with no technical reason, and that is something that a smart trader needs to avoid at all costs. For the market sentiment, actually I use this this website. So most of you are aware of this website, but just to show you how it looks like. So it is this one. You know, I like to use this one, especially when I'm looking for a high time frame trade, for a swing trade. This gives me some information about what the retailers are thinking, and I'm pretty sure even the bigger player are watching this. But this is not trading based on news. News are news. News are just news, and you don't have, when you hear a news or something like this, you just buy or sell with no trading plan, with nothing. That is just, something that you need to avoid at all costs. But the market sentiment could give you really, really important information about what the retailers are doing, are thinking at that point in time. So again, you want to, where was that? Okay, this one. You want to buy when there is extreme fear in the market, and you want to sell when there is extreme greed in the market. That piece of information can be 100% used, especially when you're looking for a swing trade. This is really important. This is new, and obviously takes some time to get used to this, to the market sentiment. Like I said, I'm testing this for a couple of months now, and actually it gives really, really nice results. And this is why I want to mention this here. But again, really important. Do not confuse the market sentiment with the news. Totally different story. Okay. Moving forward, so we talked about context, we talked about the confluence, and the next one is actually the reaction. Now we have the confluence and the context, and the next in line is the reaction. The best way to approach a trade based on reaction is to set an alert in your confluence area. When the alert is triggered, you need to check the reaction, and only after checking the reaction, you can decide to take the trade or not. I don't think it's a good idea to preset orders, because you never know what the reaction will be, when the price will touch your area of interest. I'm not going to spend too much time here, also because I explained everything in detail in the first part of the stream. But really important to actually understand that everything we do here is based on reaction. So this is why we don't preset, because you never know, even with the best confluences and best context and everything, the price could actually move higher or lower than you expected. So actually, to prevent that from happening, you need to set an alert, check the reaction. If you see the reaction that you want to see, then you can take the trade. You can use the reversal pattern, and that would give you the entry, that will give you the stop loss, and take profit can be determined using additional confluences, using your TA. Okay, so that would be the three most important part when you're building a trade. Like I said, the confluence, the context, and the reaction. Now let's move to the next part, which are actually the red flags, because like I said, even if you use this pattern in a correct way, nothing is 100% guaranteed in trading. So we need to talk about red flags, and also really important, you need to know how to react when you see a red flag, when you see something that you don't like, because the most important thing in trading is actually to have a plan. Have a plan for a good situation and have a plan for not so good situation. That would avoid panic, that would avoid making decisions, rush decision, and ultimately making a mistake. And that mistake could lead obviously to losing money, paper money, because you need to remember at Chat Champions, we are just paper trading. So let's move to the red flags. As long as you follow these 3 steps, you should be able to get good results when using the reversal pattern. But like everything else in trading, the reversal pattern will not work all the time. And there will be a moment when using the patterns will end up in a losing trade. And these are few red flags when you're using the reversal patterns. First, this is a trade based on reaction. The most important rule when you're trading based on reaction is that before you take the trade, you want to see the actual reaction. Without the actual reaction, there is no trade. And by reaction, just to make sure everyone understands what I'm trying to say here, by reaction, I mean the bounce, if you're looking for a long trade. So if you want to take a long trade, you actually need to see the bounce. And depending on that bounce, checking the reaction, checking the volume, open interest, delta, imbalances, and so on, you need to decide if that is the moment that you want to take that trade. But you need to see the bounce if you're looking for a long trade. No bounce means no trade. Or the drop in price when you're looking for a short trade. Again, based on reaction, you want to see the actual reaction. So when you're looking for a long, you want to see the bounce. When you're looking for a short, you want to see the actual drop in price. You want to see the price moving to the downside. Without that, there is no trade. Without reaction, there is no trade. And I explained this. I think I explained this pretty well also in the first part of the reversal patterns. And now let's talk about red flags when we are talking about the confluence, the reactions, and everything else. So the first red flag is about the confluence. If you see no reaction when the price is touching your confluence area, that is a big red flag. And my best guess is that is something wrong with your confluence, or maybe the momentum is too strong and the price could push lower or higher than you expected. And the entire concept of trading based on reaction is built to avoid this kind of situation. Remember, if your confluences, find your confluences, build a context, set an alert. When the alert is triggered, you can check the reaction and decide if there's a trade or not. This is actually really, really important when you are trading. So the first red flag is actually the confluence. I would say the biggest one. If you see the price, once again, let's say you're looking for a long, and let's say you are watching you see the price pushing downwards and you see no reaction at your confluence, that is definitely a red flag, and I would wait for more clarity, right? When you have a good confluence, you want to see the price touching that confluence, maybe a swing failure pattern, but after that, you want to see that confluence claimed, backtested, and start to see the price pushing to the upside. Same story when you're looking for a short. You have your confluence, you have your levels. Doesn't matter if it is a swing trade, day trade, or a scalp, you have your confluence. You want to see the price pushing to that confluence, but after that you want to see the rejection, the price pushing downwards, and after that you can actually take the trade. So the first red flag is actually about confluence. I would say this is really, really important. Without a good confluence, there could be no trade. Sorry. Moving forward, the second red flag is about the reaction. Even if your confluence is correct, the reaction could be weak, and that could be a red flag. I covered this scenario in the first stream for each reversal, so I'm not going to spend too much time again here. So in the first stream, I talked about the red flags for each scenario. First and the second, for a long, for a short, you know exactly what you want to see to give you confidence. And if you see something that you actually don't like, that could be a red flag. The most important rule for a reversal, you want to see the volume decreasing when the price moving towards the apex of the move, and after the reversal you want to see the volume increasing following the new trend. Just explained that earlier. And the second, that would be the first red flag when we talk about reaction. And the second one, and this is really important, and you will see why am I saying that, because actually happened this morning or yesterday, and we'll check some examples. If the volume is dying, or if you see CVD divergences forming, that is definitely a red flag. So let's say you're looking for a long, and you see the reaction, and you see the pattern, and you take the trade. But if on the way up you see the volume dying, and if you start to see bearish CVD divergences, in this case, that is definitely a red flag. And you know, something could actually go wrong with your trade. I think I'm going to sneeze, or maybe not. But yeah, this is definitely a red flag, and I talked about this in the first stream. But those are the most important. So you want to see the volume decreasing, and then after the reversal, you want to see the volume increasing following the new trend, following your trade. Or if you already took the trade and you see the volume dying, or if you see bearish CVD divergences, if we're talking about a long, or bullish CVD divergences after the drop, if we're talking about a short, that could be definitely a red flag. And you need to know how to handle this kind of situation. So we talk about solutions now, because now we know what is the problem. So actually we need to move towards the solution. Let me put this one here. And if you took the trade and you see a red flag, you need to know how to react. One of the most important rules in trading is to have a plan for every situation. That could avoid panic and make some bad decisions. This is why I said earlier, one of the most important things in trading is that you actually need a plan. You need a plan. You need a plan for a good scenario. You need a plan for the bad scenario. Also, you need risk management. Trading is not about hoping, is not about luck. It's about confluences, reaction, risk management. You made a decision. You know where your stop loss, your invalidation is. You know your risk management. You know how much you are willing to risk in that trade, because there's always the possibility that that trade could end up as a losing trade. You know how much you are willing to risk. You accept that risk, then there is no emotion. You just execute the trade. You have your stop loss, and if it turns out to be a losing trade, then hey, you move to the next one. But this is really, really important to actually have a plan for each situation. Also, you need to use the correct risk management, what I was saying earlier, for all your trades, and you need to feel comfortable with the risk for each trade. If you are comfortable with the risk, you can execute your trading plan without no emotions involved. This, before you start trading, you need to understand this part. This part is maybe not the most important part, because my best guess is that most of our members could potentially be very good traders, but the hardest part is actually the emotion, no? And the best way to avoid emotion is actually use the correct risk management. Like I said, if you are comfortable with the risk, then you can actually execute the trade with no emotions. You know, let's say I want to risk in this trade, I don't know, $100, 1,000, whatever. If you are comfortable with that risk, then you can just execute the trade. What's the worst thing could happen? You know, your stop loss could be hit and you lose that amount. You are okay with that, you accept that, execute the trade. Obviously, if you see the correct reaction, you know, you can use the patterns and so on. But this is really, really, really important. Now I'm going to explain how am I handling my trades when I see red flags. For a swing trade, if I'm in a swing trade and I see red flags, most of the time I do nothing and I let the price hit my stop loss. If I use the correct risk management, I know exactly how much am I going to lose if my stop loss will be hit, and I accept that risk before I open that trade. This is what most of the time I'm doing. I know. I see the reaction, I have my confluences, I see the reaction, everything looks good, I take the trade. I have my stop loss, you know, I know exactly how much I'm willing to risk, and then no. If that turns out to be a bad trade, I can live with that loss. In certain situation, I choose to move my stop loss at entry, and at that point, if my stop loss will be hit, I pay the fees and some possible slippage. That is another option. I'm not, so let's say most of the time I just, for a swing trade, I just let my my stop loss to be hit. You know, I'm okay with that because I want to make sure that that setup is actually invalidated, because sometimes you can see a retest, the retest could come really close to your stop loss, but after that the price move, let's say if you're looking for a long move to the upside, and actually the trade turns out to be a really good trade. And that is why most of the time I let the price hit my stop loss, because I want to make sure that my invalidation is hit, and then I can move to the next trade. If I see some red flags and I decide actually to move my stop loss at entry, the price could push to the, let's say I'm in a long, the price could retest once again, hit my stop loss, and only after that you see the reversal. You know, this is what I like to do for a swing trade. But depending on the situation, depending how much confidence I have and the price action, I could actually move my stop loss at entry to protect my position. There's also the possibility to close a certain percentage of my position, just enough to cover the losses if I leave the stop loss at entry, at the original point as planned in my trading plan. So what that means? So let's say I'm in a trade, and my stop loss is, let's say, 1%, right? So let's say my position is 10,000 contracts. So if my stop loss will be hit, then I lose $100. Let's say I see some red flags, right? And I decide I still want to keep my stop loss at the original point, but I also, if my stop loss will be hit, I don't want to lose any money. So I close enough of my position. At that point in time, I need to be in profit. So let's say my stop loss is, let's say, 1%, and the price is, once again, if I'm in a long, let's say the price is, let's say, 3, 4, 5%, I'm winning that trade. So I close enough, could be 30%, could be 20%, could be 10%, depending on my risk management and on my stop loss. And I let my my stop loss at the original position. That way, and I maximize the possibility for that trade to actually to play out. Like I said, if we see some sort of a retest, some stop loss weak hunt or something like that. But in the same time, if actually my stop loss will be hit, then I lose nothing. I pay the fees and possible slippage. But other than that, I lose nothing. That is also something that I choose to do. Again, depending on the situation, I gave you all the scenario that I'm using, so you can choose the best one for each situation. So this is what basically how I'm handling my swing trades in terms of stop losses and when I see red flags. Moving forward, for a day trade. That was for a swing trade, and this is for a day trade. Remember, totally different story. If I'm in a day trade and I see some red flags, then I close take profit 1, I move stop loss at entry to protect my position. This is what most of the time this is about. If I see red flags, close take profit 1, move stop loss at entry, and I let the market decide if I'm wrong or right. At that point in time, obviously, even if my stop loss will be hit, then I lose no money. There is the possibility to close my entire trade, but most of the time I close my take profit 1 and I move my stop loss at entry. Take profit 1 could be anywhere between 25 and 50%. Like I said, at that point in time, doesn't matter if the price will hit my stop loss. Actually, I still make some money, or at least I don't lose any money. And then this is for a scalp trade. If I'm in a scalp trade and I see some red flags, most of the time I close my entire trade, or depending on the situation, same as for the day trade, I close my take profit 1 and I move my stop loss at entry. When I'm scalping, obviously for a scalp, your take profit 1 could be anywhere, like I said, between 0.5 and 1%. Then I like to be more aggressive, even with my take profit 1, or if I see red flags because the price is actually really close to my entry or to my stop loss, then I just close the entire trade and I just move to the next trade. So this is basically how I'm handling this kind of situation, and that was the part that I want to give you, because in the first part of this stream, I talked about in depth about reaction, about patterns, how to use them. But also I think it is a good idea to talk about when this scenario will not actually play out and how to actually handle this kind of situation. So this is what I'm doing. I explained for a swing trade. This is what I'm doing for a swing trade, and obviously this is what I'm doing for a day trade and for a scalp. A bit different, but really it's up to you to which one to choose. My advice is to test everything that I said here, test it, and find which one works better for you. Okay, I want to see if I have okay. Victor saying that I'm looking good with the chart champions shirt. Yeah. Okay. I'm not sure if I want to start with the examples or to start actually with the questions now. I still have 2 slides with questions from the first stream, so I'm going to answer, but maybe it is better to let's hide this one, to actually to check what's going on and to give some examples. So I would, most of the time I like to see I like to check the most current price action, because that way I can actually check what's going on in trading view and also in ExoChart, so we can see the pattern in trading view, and then we can check the reaction in ExoCharts. So actually let's start with this. I would like to start with this one. Let's move to 5 minutes. Like I said, 5 minutes is the best time frame for something like that. And I would like to start actually with what happened this morning, because like I said, this morning we actually had a really nice example about how a reversal pattern could actually work. So if you watch my morning updates, you'll know that was my main Confluence, and this is what I was expecting, a touch of this weekly level. So actually we've got this touch, right? Swing failure pattern, and actually the price starts to move to the upside, right? So here we have the first retest, right? If we pull the fibs from low to high, somewhere in this area, then we can see the retest actually touch 0.5 level. You all know for the first pattern is acceptable anywhere between 0.32 and actually 0.886, sometimes even lower, because we will see actually this comes a bit lower than the 886. As long as the price doesn't make a new lower low in this case, the first pattern could apply, right? So let's say you choose to take the trade here. Stop loss should be according to the pattern below this low. Most of the time I would give it some space, 0.1, 0.2, 25%, something like this, to avoid stop loss weak hunt. And you know, the take profit should be determined using confluences and technical analysis. So let's say you actually took the trade here, right? So you took the trade in this area. Your stop loss should be somewhere in this area. And after that, actually we see another retest, but really important, the price doesn't make a new lower low. So even if you took the trade here, you're actually okay, right? So your stop loss will not be hit. This retest, then we have this retest. And for this retest, we can actually pull the fibs from, again, from, let's say like this, from low to high. We can see this retest goes a bit deeper than the 886, but once again, it follows the first pattern, right? And after that, we see another retest, which goes more or less down to the CC. And after that, well, you all know the story, the push to the upside and what is going on right now, right? So this is the case where actually the pattern works. And now let's move to Excel charts. Let me refresh this just to make sure I get the correct levels. And we need to check actually the reaction, what happened here. Okay, so this is what we have right now. Again, here we can actually check the context, because like I said, you want to see the volume decreasing on the way down. You want to see the volume decreasing, you know, and definitely at the retest, you want to see the volume decreasing. That would give me personally confidence to actually take this trade. All right. So yesterday, you all know I was talking about this range, and somewhere in this area we had daily open, and I was saying that if the price will actually lose daily open, definitely that is a sign of weakness and more downside is possible. So we need to actually see what happened here. So we start to see the volume increasing on the way down, 11 million, 19 million. We start to see 40 million, 25 million, 24 million, right? 15 million, 33 million, 26 million. So at this point in time, the price was actually, the volume was actually increasing on the way down. So at that point in time, you know, a trade would not be a really good idea. Actually, let me do this and let me load this template, because this is actually really important. And one of the questions that I got in the contenders chat this time was about this move, because also in the update I was saying, so actually this is the move I was talking about, and I said for more downside, I don't like to see this daily level lost. If this daily level will be lost, then definitely more downside is possible. So the bullish scenario is cancelled. So the question was about a trade here, right? And in this situation, and especially when you start to see single prints forming on the way down, so we have 1, 2, 3, 4 single prints forming, that is definitely a big red flag. So you start to see the volume increasing on the way down, right? We start to see single prints forming. That is definitely the moment to actually to wait. And we can see at this daily level, small reaction, but after that, the level is actually lost, back tested, and another push to the downside. So in this kind of situation, I would say the context is not correct, because the price is actually pushing to the downside. So remember, the contest can be built checking the price action prior to touching your confluence. So let's say this is your confluence, right? It could be a valid confluence, but as long as you see the price pushing towards your confluence with increases in volume, and especially with single prints forming, then I would say that is not the best context. Obviously, we need to check the reaction, and as you can see, actually the reaction is really, really weak, right? Totally different story here, and you'll see why. Okay, so let's follow the volume. So the volume was increasing, still 30 million, 28 million, and here we can see 41 million, right? So the volume is still increasing. So we see 32 million, and right at the bottom of this move, we can see 43 million. So up to this point, the volume was increasing, right? Again, creating single prints. Definitely when you see something like this, you need to wait for more clarity. After that, so basically the price is touching that weekly level. The retest. Let's check what's happening actually to the first retest. The volume, 14 million. So we can say the volume is lower. So the volume is actually decreasing, right? So 40 million. Okay. But in the same time, right, we want to see one of the, maybe the biggest condition is to actually to start to see the volume increasing on the way up, right? With positive delta, with buying imbalances. That is something that you want to see. And we actually got that 21 million. So increases in volume, open interest, buying imbalances. So everything looked good at this point in time. But after that, we see this range where the volume is clearly decreasing. So we can say the volume is actually dying here. This is not something what you want to see. I would like to see this spike in volume, and maybe somewhere in this area, I would like to see another spike in volume, the price pushing to the upside, change in market structure, and so on. That would give me confidence. But actually, we see this range. The volume is, as you can see, is dying here. There's almost no volume, right? And on top of that, here we start to see some bearish CVD divergences. Remember, red flag, volume dying, bearish CVD divergences when you're in a long. When you see something like that, that is definitely a red flag. And I gave you the scenarios that you want to see. Really depends. If you are in a scalp, definitely when I see something like this, I close my trade, because most of the time there will be a retest. And depending on the retest, where the retest goes, I can actually re-enter. If I'm looking for a swing trade, then I do nothing, or I choose to move my stop loss at entry. I explain the scenarios. Right, so we see volume dying, bearish CVD divergences forming here, and most of the time when you see something like this, the price will push once again to the downside. We start to see increases in volume on the way down. So 60 million, 40 million, 19 million, 50 million, 24 million. But the price is not making a lower low, still making a higher low here. And the volume, if we check the volume, so 43 million, 24 million. We can see that actually this retest, the volume is lower. So the selling pressure is decreasing, slowly decreasing, okay? Apologize. And after that, we see another retest, and actually on this retest, right, the volume is even lower. So we can see the price starts with 43 million, right? Moving to 24 million. And after that, this retest is actually 5-6 million. So the volume is actually decreasing. So the pattern is actually working here, right? So you can actually take the trade at any of these retests. Here, depending if you want to react to this, you need to check the price action. Maybe you want to react to this one. Maybe you want to close some take profit or close the trade, whatever you want to play this. But other than that, this one, or actually this one, could be another entry. Really important, the price here doesn't make another lower low, so your stop loss is actually safe, right? And after that, so the reversal pattern actually played out. Now, totally different story where what the price is doing after that, right? Because also I was saying really important is to see this daily level claim. So actually right now the price tried once, twice, and actually we see the rejection. So the reversal pattern played out here. That could potentially give you an entry, a stop loss, but what happened after that, that is totally different story, you know, because you cannot control the market, you can only take the trade here. And actually here, this is actually new, we can see actually the same pattern applying here. So once again, we see the push, right? We see the rejection, and once again, if we pull the fibs, something like this, low, high to low this time, we can see the price actually retesting the daily level. If you check my first stream, you'll see that best case scenario, you want to see the fibs together with the main confluence for this trade tested. In this case, obviously, this is the main confluence. Additional confluence here, we actually have, what was that, previous week open. So you can see previous week open, previous day week point of control. So we have multiple confluences, but let's say for me to keep this simple, the main confluence is the daily. So we can see this, we can see the rejection, the price comes back for a retest, back testing between 786 and 886, back testing the daily level, followed by another rejection. And we can actually check the order flow here. This is the first time that I'm actually doing this, because today I was a bit busy with the stream, with the slides. And this is actually the trade that I took, because at the first touch of a level, and this is an important level, most of the time you'll see a rejection. After that, depending on the retest, depending on the reaction, you can take the trade. But we need to see what's actually going on here. So we see basically, okay, let me put it like this. Let me make sure that I get this correctly. Okay, so we see actually this is a combination between the second and the first pattern. So the price make this higher high, small rejection, the price comes up once again, but you can see here the volume is decreasing. So we're going up on 50 million, and then we're going up on 31 million, right? So someone shorted here. Most of the time you'll see the stop loss somewhere in this area. So the price moves up once again, taking the stop losses, you know, and only after that we see another retest, and the prices actually start to push to the downside with big increase in volume, selling imbalances, you know, negative delta, right? So that is a pretty nice combination between the second and the first pattern. Like I said, most of the time you'll see when you see a reversal, again, this is I would say a scalp with the possibility of turning into a day trade, or I mean locally you have the pattern, or if you want to extend this, you know, to this pattern, and we need to check actually what happened here. So like I said, you want to see the volume decreasing. So the first time the price was pushing 50 million, 31 million to the upside, and here let's see what's going on with the volume. So the volume was 16 million, 13 million. And make sure this is the top. Yes. So we can clearly say that the volume was decreasing. So 50 million, 31 million, moving to 16 million. Really important increases in open interest here. Big bearish CVD divergences, right? So that is kind of the ideal scenario. So the volume is actually decreasing here. So we can see 50, 31, 16 million, right? So the volume is obviously decreasing. bearish CVD divergences. Here, increases in open interest. So with the possibility of some trapped longs in this candle, bearish CVD divergences. So no, backtesting the daily, the main confluence. So once again, that could be a really nice scalp trade. You know, like I said, most of the time the reversal pattern will work if they are applied correctly. And this actually is a really good. I wasn't actually aware of that because I took this trade, but after that I wasn't able to check the price action. But actually, this is a really nice example. This is pretty much what you want to see. So here locally we can apply the pattern, second pattern, moving to the first pattern, and then the push to the downside. And after that, you can trade the retest, the volume decreasing, bearish CVD divergences, increases in open interest, possibility of trapped longs, wait for the reaction somewhere in this area when you start to see the volume increases, and you can see the volume starts to increase on the downside, selling imbalances. We can see starting with 4, 2, 3 million, and then we start to see increases 25 million, 14 million, 14 million, and so on. So the price is actually pushing to the downside with increases in volume and selling imbalances. So this is pretty much what you want to see in this kind of situation. So this is just few examples. You know, we can actually look for more examples. But I would say the patterns are working most of the time if they are applied correctly. Actually, I would like to start with the questions because I need to answer the question, and then we can actually move to, if there is time, we can actually check more examples. So let's start with the question. This is from the first stream. So a question from Wade: if you're looking for at 1 to 4 hour chart on that time frame, do you want to see the reversal pattern to confirm it's not a lower high? Actually, the reversal pattern are giving the best results if you see you want to see the patterns locally. So like I said, in this kind of situation, I mean, you want to see the pattern happening like here locally, like I said, this retest. So let's say locally talking, you know, like here or here. I don't like to use these patterns actually on high time frame. I like to use them on low time frame, and the only thing that the reversal pattern, like I said, is giving you is the actual entry and your stop loss. Like I said, for me, the best results are giving on the low time frame. 5 minutes, that's all you need, and you want to see the reaction locally. I mean, you don't want to see too much time between the reactions. What time frame would you say the reversal pattern has the best results? 5 minutes. Right now, it's 5 minutes. Maybe in the future, this could potentially change, but for the moment, 5 minutes is actually all you need. Do you trade this pattern with all levels type, horizontal, previous day equilibrium, previous day value area low, or only horizontal pivots and naked points of control? I explained that in today's stream, the type of confluences that I want to see. So really depends. For a swing trade, I would like to see high time frame confluences, horizontal level, possibly untapped, naked session point of control, but has to be a high time frame. For a day trade or for a scalp, I would definitely use previous day levels, you know, or VWAP or local CC or anything like this. So it really depends of the situation. This is why one of the reasons that I wanted to touch the confluences, that at least for me, they give like the best results. So that would be the first slide that I have with questions from the first stream, and this is actually the second one. Is it possible to recognize the second swing failure pattern by reading the order flow before it actually happens? Yes, actually it is. It is possible, and I was talking about this in the last stream. So most of the time, actually, let me load that, and let me see if I can actually find that, because I want to make sure I give you the exact information. Not sure if I can find that. Okay, so here it is, and this is what I was explaining about that. So most of the time, if you see the price moving towards your confluences with increases in volume delta in open interest, it is more likely for the second pattern to play out. If you don't see a buying tail, selling tail, and big liquidation at the first touch of your confluence, it is more likely that the second reversal pattern will play out. And this is what I actually was explaining earlier. If at the first bounce you see CVD divergence is forming and big rejection, it is more likely that the second reversal pattern would play out. Actually, today in the example, still the same pattern play out, but you know, sometimes when you see big CVD divergences, big reaction, you know, that is actually possible to happen. So yeah, it is possible, but just like everything else in trading, nothing is 100% guaranteed. So sometimes will work out, sometimes really couldn't play out. If you take the trade from the retest, but the volume after the retest starts to decrease, would you close the trade? I answered everything in the stream, so I gave you all the example about the swing trade, day trade, and scalp trade, how I'm looking and what are my scenario, what are my reaction depending on each kind of trade that I'm looking for. So I think I already answered this question. Regarding the swing failure pattern, can it be applied to horizontal without necessarily taking out the previous high or low? So regarding a swing failure pattern, can it be applied to horizontal without necessarily taking a previous high or low? Yes, it can be, and this is why we have the first pattern and the second pattern. So if the price is not making a lower low or a higher high, that is first pattern applying. If the price is actually making at the retest making a lower low or a higher high, so a swing failure pattern of a swing failure pattern, then the second pattern could be applied in that situation. Okay, so that would be the question from last week, and now let's see what I got from actually today. Cool, so that should be from today. You say high time frame confluences. Does it mean a VWAP or the daily open, for example, is not good enough for a trade? Definitely is good enough for a scalp or for a day trade, depending on the situation. For example, VWAP or daily open, it's good enough for me for a scalp. You know, but for let's say if I'm looking for a swing trade, definitely a daily open can be used as additional confluence, but I will not look for a swing trade based on the daily open or based on VWAP. So for a swing trade, I need high time frame confluences, but for day trading, and most important and most of the time for scalping, previous day level, daily open, VWAP, a local CC, naked session point of control can be definitely used for trading. Moving forward, do you use this strategy with the trend reversal candle or just regular candles? No, just regular candles, 5 minutes. This is what I use. I never tried with the trend reversal candle. Actually, that's an interesting idea, and I will test that in the future. But for the moment, no. I mean, this is what you see in TradingView, and in ExoCharts, this is the main template that I'm actually using, because here I can check the volume, I can check the selling, buying imbalances, delta, and everything else that I need, liquidations, you know. this is the main template that I'm using for when I'm trading these patterns. Referring to context, I expect the swing failure pattern to be changing the market sentiment and the price action. Should the context also be changing? So I expect the swing failure pattern to be changing the market sentiment and the price action. Should the context also be changing? So the context, basically, when I'm building the context, and let me find this one because this is actually a very good example. This entire area, because you all know if you watch my stream from Monday, this weekly level was actually the main confluence that I was expecting. Obviously here we had a small front run, right, of the weekly, also value area low, and the CC and 0.66. So we've got this push to the upside. But the main confluence that I was expecting was actually this weekly. Obviously together with the stocks. But anyway, I'm not going into a lot of details. And everything starting with this rejection, when actually this range broke to the downside, this can be used to build context. So as long as you see here increases in volume, right? So we can see 11 million, 19 million, 23 million, and so on. So constant increase in volume on the way down, right? That is building context. What that means, I'm not going to take a trade, especially when I see this single prints. I'm not going to take a trade because most likely I will get stopped out instantly from that trade. But when I have my confluence, right, when the price is actually touching that confluence, then I can use all that context, you know, there's a lot of selling, a lot of this, and I can actually use that together with the context, together with the reaction, because here I can actually see the volume slowly decreasing. So 43 million, retest 14 million, the next retest 24 million, and this one 5.6 million. So at that point in time, I would say here, you know, as long as you see that the context is not there, and also the confluence, right? So everything about context and confluence. And when actually the price is touching my confluence, then I can actually check if the reaction is correct and if one of the two patterns can be applied to take the trade. What are the key factors that would make your strategy successful in a bull market, but not in a bear market? It's just a matter of testing, and actually, it works pretty much the same. It works really well in a bull market or in a bear market. But to give you like the best results possible based on my testing, I need to test it in the bull market and in the bear market. But really, it works pretty much the same, as long as the confluence is the correct one, because maybe you have a confluence and the confluence is not correct, then obviously the pattern will not apply. Or if the context is not there, if you see, I don't know, everyone is really bearish, if you're looking for a trade and you see constant increases in volume on the way down, then obviously maybe a trade will be not possible. But actually, from my testing, it works pretty much the same in a bull market and in a bear market. Obviously now, bull market and bear market, we talk about a trend, right? We can talk about if we actually had a bull market or a bear market, but you know, let's say on a trend that could last a couple of months to the upside or to the downside, my testing is pretty much the same. But as a general idea, I would like to have everything tested in a bull market or in a bear market, because there are few strategies that actually give better results in a bull market and some not so good results in the bear market. But this one, the reversal pattern, they work pretty much the same as long as they are applied correctly. Okay, I think I have another slide with. Okay. So let's close this one and let's start with the second one. Okay. I feel that sometimes when a level has too many high time frame confluences, more people are expecting a reaction and that trade end up in a loss. Is this also your experience? Really depends of the situation. And there is one thing that you could do, and this is why I mentioned how I actually manage my trades, right? Because sometimes, most of the time, I would say even my swing trades, they are starting as a scalp trade, right? You start as a scalp trade, you know, you see everything looks good, then that trade could actually turn into a swing trade. You see red flags, then you can manage accordingly. Really depends. But I would say, again, really depends of the situation. But the reversal patterns and trading based on the reaction actually could give you like a very good entry and a very good stop loss. I mean, most of the time the stop loss will be very close, and even if you get stopped out, you know, the loss is like really small. And there's the other thing that you could do when you see red flags. I mean, I shared my strategy, what I'm actually doing when I see a red flag, and you can trade it accordingly. Even if you're actually looking for a swing trade, you can treat it up to a certain point. You can treat it as a scalp. You know, you see red flags, you know, you can close take profit 1, move stop loss set entry, or, you know, depending on the situation, really how you want to manage this. Most of the time, from my experience, the high time frame confluences, they really work. Maybe you don't see like a full reversal from there. So, like for example, what we have earlier, right? So let's move on. Let's say higher time frame. Okay, what I'm trying to find actually here. Okay, this one. Okay, so let's say this one, right? So there was a confluence, there was a swing failure pattern, and we've got a reaction. In the end, you know, for a swing trade, you would expect higher, and it was it reversed here. But if you use the reversal patterns, and actually this is another example when the reversal pattern actually worked pretty well. When you see this, I mean, in this kind of situation, you know, you can always take some profit, move stop loss at entry, and if you see the price pushing to the downside, you know, it is what it is. As long as you close your take profit 1, move stop loss at entry, that in that trade you should be able to make some money, or at least you don't lose any money. So I would say really depends of the situation. It's like hard to talk in the for a general case. Most of the time the confluences works, you know. But again, and this is why we trade based on reaction. You know, set an alert, check the reaction, and take the trade. And sometimes, yes, it could be because if everyone is looking at that level, you know, the price could move straight to that level. But in that situation, if you trade based on reaction, you know, you see the reaction that you don't like, you see the level is not respected, then you don't take the trade. This is the big advantage of trading based on reaction. What would you say Confluence Igor's fractal is a good entry? I cannot answer this question because actually, and unfortunately, I didn't have time to properly check the stream and properly test it. So at this point in time, I'm not able to actually to answer this question. But from previous experience and knowing Igor, I would say definitely, if he is using it, then definitely it can be used. But to give you like a proper entry, proper answer, I need to actually to test that. So maybe in the future I can actually answer this question. Do you use the same stop loss when scalping with this strategy? Yes, the stop loss is actually the same. The only difference is that, again, really depends on the situation. Maybe for my swing trades, instead of giving like 0.1, 0.2%, I give it just a bit more, but not too much, because that's the thing with this reversal pattern. If the confluence is good, you know, the reaction is good, and the actual reversal, full reversal happens, you don't need like too much of a stop loss. Again, this is based on the swing failure pattern. It's just a deviation from the swing failure pattern. So let's say the max I give is 0.5% from the wick to the upside or to the downside, but other than that, it's pretty much the same. Again, really depends of the situation. I understand that you want to see increases in open interest, volume, delta as a reaction of a level, but how do we know if those are early traders? It's really hard to answer this question, because each trade is actually different. And here's the thing: best case scenario, yes, increases in open interest, volume, delta, but most of the time I'm okay with increases in volume. If the increases in volume, if you see increases in volume, that's good enough. And really important, you don't want to see the volume dying or CVD divergences forming. Bearish CVD divergences if we talk about a long, or bullish CVD divergences after the drop if we're talking about a short trade. Other than that, it really comes down to each trade, each situation. It's hard to say like this is a good reaction and this is not a good reaction. And the best thing you could do is actually trade, you know, try to get that experience, try to build the confidence, and try to build everything. And I'm pretty sure in time you will understand. Actually, I got a question, many questions about that, because let's say with the first pattern, the reaction could be let's say between 0.32 and 886. So how do I know when to enter? And there is no like good answer for that. Most of the time you will see the reaction somewhere around the CC, but you know, it really depends from situation to situation. And I would say it is important to wait for the retest, and after that wait for the actual bounce. Let's say if you're looking for a long, if you see everything that you want to see, volume, buying imbalances, you know, positive delta, that could be, but to actually give you like the answer, it's really impossible, because it depends of each trade. So each trade is different, and this is why I would say it is really important to build the experience, to build the confidence, you know, and at some point in time you will know exactly when to enter the trade and when not to enter the trade. Other than that, it is really impossible to give you like the answer. You enter here or you enter here, because it really depends of each trade. Let me show if there are. No, actually, those are all the questions. So I hope this stream actually it will help you to understand better when to use and how to use the reversal patterns, and what to do if you see red flags, if you're looking for a swing trade, for a day trade, for a scalp, and how to build the confluences, the context, and the reaction. If you use these steps, my best guess is that you're gonna get some really good trades using these reversal patterns. Then the conclusion, the last slide. I would say this is just an introduction, and in my opinion, we can make an entire module about reversal pattern and reaction. Like I said, I'm just touching, you know, certain thing, because there is a lot to talk about, and we can go in depth about everything. But like everything, we need to start somewhere, and I think these two streams are a very good start. I try to explain in the best way how I'm using the reversal pattern and the reaction, and this is not the end, but just the beginning. Like I said, because the market and the reaction are changing every day. And as traders, we need to adapt to a new situation in the shortest time possible. So these reversals are working. These reversal patterns are working very well right now, but maybe in the future, I don't know, the market will change, and the reaction and the reversal patterns maybe will change. So we need to test it every day, you know, to make sure they work, or if they need some certain changes. And the only way to do that is to trade and to build experience and the confidence, and that would help you to become the best trader possible. This is why I always say, when you have a question, or like the one, where do I enter? Do I enter here? Or try to use the pattern, try to trade, try to build the experience, journal your trades, and I'm sure it will take some time, but you will get there. You'll know exactly when to enter, when not to enter. Obviously, you'll not win all the trades. Like I said, you will win trades and you will lose trades, but most of the time, using this pattern, it will give you some really, really, really nice trades. The rest, like I said, is just practice. Happy trading, everyone, and to be continued. Because, like I said, this is just an introduction. I mean, this is good enough to get you started with the reversal pattern and the reaction. But, you know, we can talk a lot about this in the future. I'm pretty sure we're going to have more streams related to reversal pattern and reaction. But for the moment, I would say this is something to get you started. Yeah, I guess that would be all for tonight. I really hope that you enjoyed the stream, and with this second part you understand better how I'm using and how to use the reversal patterns in the best way possible. And I will catch you all for tomorrow for the morning update as usual at the same time. And until then, thank you for everything. Cheers and bye bye.